Qantas's announcement that it's clawing its way back to profitability by cutting more flights failed to thrill investors, perhaps because they're also passengers. The airline announced it's reducing debt by cutting capacity by 5%. So don't expect to have an empty seat next to you, because as you can see here, demand for flights is almost back to pre-COVID levels. Now, airlines have copped a lot of flack recently for delayed flights, but if you look at this long-run chart, flights are more on time than they were pre-COVID. As for cancellations, though, they're running above long-term averages, with Qantas canning 1 in every 13 flights last month and Virgin cancelling 1 in every 19. Now, Qantas says it's cutting domestic flights to help combat the high oil price, so let's take a look at it. Recessionary fears pushed crude prices lower of late. Brent crude has shed more than 10% over the past 2 weeks, and it's on course for its first monthly drop since November. Welcome news to anyone with a combustion engine. Energy and mining stocks dragged on the local market, but it still managed a 1% gain. Investors regained enthusiasm for lithium stocks after Vulcan signed a deal with a car maker, while Magellan sold its burrito business. Wall Street was buoyant despite a raft of weak economic reports overnight, which might signal that we're now at the point where bad news is good news for markets, because central banks will stop hiking rates. Europe was down in the dumps about the reports though, and the Aussie is still at 69 US cents. How could we finish the week without touching on housing? Here's how Australian banks' exposure to housing compares to banks in the US, UK and Canada. Let's hope the house always wins. That's finance.